In video 2, we looked at liquidity and where liquidity sits in relation to higher time frame candle ranges. So at the extremes, the highs and lows of higher time frame candles. But how does price actually move through that liquidity? And how can we use that information to take high probability trades? Well, the answer lies in AMD, accumulation, manipulation, and distribution. I'm going to show you exactly how that works. So let's start with a tiny bit of theory. What is AMD? So AMD is the engine driving CRT trades. Every single trade that you take will have some form of AMD. That is price ranges in the form of higher time frame candles, firstly accumulating, whereby price consolidates and builds liquidity in the market. Manipulation, where price sweeps or targets that liquidity at the high, the extreme of the accumulation candle. And then distribution, price distributing to the opposite end of the accumulation candle's extreme. So the process is accumulation, manipulation, distribution. And this is most often a 3-candle pattern. It can be more than 3 candles. We'll get into that in later lessons. But for now, let's just think about this process. So you have candle 1, an accumulation candle. This candle's job is to build liquidity. So you'll see a lot of the way price moves in these accumulation candles is all about manufacturing new entries into the market, where traders are setting stop losses. So obviously you have the extremes of the candles. You also have a lot of internal liquidity points in this candle. Price then breaks out above the high or below the low of the accumulation candle. It targets the extreme of the range, that external range liquidity that we talked about in video 2. It then closes back inside the range of candle 1, the accumulation candle. This signifies that the liquidity at the extreme of the accumulation candle range is sufficient enough, or the supply, demand, whatever way you're looking at the candle, is sufficient enough to drive and suppress price back inside this candle's range. Once you see a close of this manipulation candle, then the most logical targets for price are the next areas of external range liquidity. So that's target 1, the manipulation candle low, and then target 2, the low of the accumulation candle. So this is actually very straightforward. You have almost like a ranging candle where liquidity builds. Liquidity at the extreme of candle 1 gets swept. We close inside the range. This gives us our target, which is 1, 2, distribution back to this low. And this third candle happens very fast because all of this is building longs in the market. And then this distribution is just aggressively selling into them. The reason this happens is institutions are accumulating positions. They're then manipulating higher to entice more liquidity into the market. Then we distribute fast against them. So our job as retail traders is to just piggyback on that exact momentum. So AMD, when it comes to swing trading, is then straightforward. We are either trading a direct CRT. So we're trading candle 2 and candle 3. Once we get that accumulation manipulation, we're either trading from candle 2 towards our distribution targets, or we're trading the distribution itself, which essentially is a higher time frame reversal. Or we are trading an even higher time frame CRT. We see this AMD pattern in motion, and we'll get into what this looks like, but maybe this is on the 3-month. But we're not seeing exactly what we want to see on the monthly or the 2-weekly, but we know the context above that is AMD. So it's in motion. So we are trading continuations. So there's 2 aspects. One is we're looking for a version of this. And the second is we know this is playing out on a higher time frame. So we can then use the interaction between monthly, 2-weekly and weekly candles, and sometimes even lower than that, in line with price action, to get involved in continuation trades. So let's take a look at what this looks like on the charts. And we've spent in video 1 and 2 time looking at this AMD pattern. So we had essentially a bullish accumulation candle right here that printed, you see, between the open and the close of this 2-week candle, we see bullish accumulation occurring. Then we see a sweep below the low. We see breakout to the downside. This price closes inside the range of this candle. Then what it does is draws towards the external range liquidity at the high. So you have accumulation candle, manipulation candle, distribution candle. And we can use this information to pick our entries. What I want to show you is something interesting if you haven't already spotted it. What also is this candle and this candle? Well, previously this was a manipulation candle and this was a distribution candle. Because if we back up what happened prior to this, we saw this specific candle from the high to the low. You see that it printed over this 2-week period. This candle was an accumulation candle. Price then traded through the high, enticing new longs into the market, have bullish price action right here. We then get a close inside of this candle's range, so price closes here. So we have swept this external range liquidity. Where does price target? The low. So it distributes to the extreme of this candle. So we have AMD turning into AMD. So this is just a living way that the market actually produces interaction between candles. And this is only half the story. So this is just spotting the pattern, learning to trade it. But we then have another or additional ways to understand when it's likely that this pattern will play out, when it's likely to see price extend beyond this AMD pattern. And that will come later in this course. But for now, what I want you to just focus on is this AMD pattern, AMD. Once you start to spot this, you will not be able to unsee it, and you'll see it on every single time frame. We're looking at swing entries, so primarily 12-hour execution, sometimes smaller 4-hour execution, but primarily in line with weekly, 2-weekly, and monthly trades. But you can take this down time frames. This works just as well on lower time frames. But of course, then you have to have that trade-off of, do you want to just do a quick bit of analysis in the day and get involved in high probability trades that play out? Or do you want to be sat on the charts all day watching these patterns emerge and learning how to trade them, which is more of a lifestyle choice. But anyway, this is what I want to make the focus of today's lesson. Next, what we're going to do is look at specifically how to spot accumulation candles. Then we're going to deep dive on manipulation candles and then distribution candles. Then we're going to start looking at how to actually trade these things. So, see you on the next one.